Blue Star is seeing a demand recovery in room air conditioners after a weak FY26 with industry volumes rebounding sharply in May. It's not just that, the data center play is looking exciting. Before we speak with Mr. Thiagarajan about that and more, Mahima joining in to set up the conversation.
Right, Tamana. So while one side of consumption will get impacted because of weak monsoons, consumer durables and ACs especially are going to definitely benefit in terms of demands because of summers being harsh, and that we've seen in terms of Blue Star. Because in the recent management meet, the management did say that RAC demand has improved after a difficult FY26. Channel inventory is no longer a concern. May 26 was a strong month for RAC with an estimated volume growth of around 40% year-on-year basis. Margins have remained near key pressure point, but they've taken certain price hikes, and although the price hikes are slightly below versus where the inflation stands at right now, around 12 to 14%, and non-RAC cooling business could grow anywhere between 10 to 12% over medium term. Plus, data center is a very big opportunity where Blue Star already is present through EPC as well as MEP and cooling solutions, and has around 25% market share in MEP business. So it'll be interesting to find out as to how sustainable this demand is and how big a business can data centers be going forward in the next 3 to 5 odd years.
B. Thiagarajan, Managing Director, Blue Star, joining in now. Mr. Thiagarajan, it's almost a reversal of what we saw exactly a year ago, isn't it? You were stressed then and you're smiling now.
Good morning, Tamanna. It is a pleasure to interact with you today. Yes, I would say I'm partially only happy. Summer delivered, therefore the volumes have grown. Inventory level is not an issue at all, but the margins continue to be under pressure. You know that the entire cost increase could not be passed on, and the industry as well as Blue Star may be impacted due to this. That's the reality.
Okay. Just elaborate a little bit on that. When you say that the prices could not be passed on and there will be an impact. So even though volumes have grown, you're saying margins will continue to be impacted because of the bump in raw material costs or input costs?
I think so. See, the cost increase so far till the season which began somewhere around April 14th, it is around 13%. But what could be passed on is somewhere around 8%. 5% could not be passed on at all. In the meanwhile, due to products which are connected with the petroleum or the transportation costs also have gone up further. So therefore, there will be a deterioration in the margin. The outlook that we have indicated is as follows, that as far as room air conditioner business is concerned, the revenue growth in volume term will be 25%. In value terms, it will be 30%. But the margins may be down. We have to wait and see by 200 basis points in operating margins compared with last year. That's what it is. And normally in a summer season, you should aim for 9.5 to 10% of operating margin, which may not happen due to this. And this I have been saying right from March, that the key challenge is this time it is not the volumes or revenue, it is about the margins.
Mr. Thiagarajan, good morning. Neeraj here. Now that the situation seems to have cooled off, or the stress seems to have cooled off a little bit, can you hypothesize what the annual margin picture could look like, since margins are the key issue, if the current status stays as is?
It's very difficult to predict. We have to make hell of a lot of assumptions. We are going to assume, to begin with, the war is over. We are going to make an assumption that the supply chain will resume and the normalcy will be restored. In our case, it is connected with the metals, the steel, copper, all these things. And if Middle East reconstruction starts, again, metal prices will will go up. Now, one can say that, look, rupee probably has cooled off. That for sure we can make an assumption. So having said that, the aim is that full year basis, we should maintain the margins that we delivered last year. That is the only way we can operate at the moment. But the headwinds so far at a peak season, it shouldn't have happened. It happened. This industry, the period when we wanted to deliver volumes as well as profit, the conflict was the West Asia conflict was at its peak, and rupee depreciated substantially. That is the issue. And we all operate with optimism. So the hope is that we will get back to last year margin levels. A lot of hard work will have to be done.
That's good. Mr. Thiagarajan, you are known for your candor, and therefore I'm inclined to ask you, where is it that you see the silver lining? In margins or in this thing? So if I were to ask you, FY27, where is the silver lining? What is the blue sky? What would you say?
For Blue Star, it is the commercial air conditioning as well as the electromechanical projects part of it, where you have data center industry propelling growth. In fact, demand is more than what one can deliver. You know that we have more than 30% market share, and the order book is full. Orders are flowing in, and we are a very large player in the EPC part of data center business. We also make certain equipment. The inquiries are beginning to flow for that as well. So this part is indeed an interesting one. The second part is India's manufacturing story continues. Therefore, the demand from manufacturing sector, specifically advanced manufacturing, and plenty of it, like whether it is solar, EV, semiconductor, the order inflow is very high. And therefore, where we would have diverted resources to infra projects, which all used to go on for 3 years, 4 years, these are projects, the data center and manufacturing, 12 to 18 months, the jobs will be over. Faster closure means good cash flow, and the margins are decent. So that is a silver lining.
Mr. Thiagarajan, hi, morning. Alex here, and you've spoken about this in the past, the fact that you want to make Blue Star all-weather. The question is, does that happen in FY28? Based on what you're talking about, your order book is full. So first of all, what is the size of the order book on the commercial side? And when you say that you're not capable of taking more because you need to execute these, are you working on creating that capacity as well?
Very much. We will never say we will not be able to execute at all. You have to be agile to divert the resources from one segment to the other. So that has been the hallmark of Blue Star, because we are not only a B2C player, we are also a B2B player. And right now, data center and manufacturing is propelling growth. We are diverting resources into that, and we will maintain our leadership position there.
But what is the order book stand at right now for the commercial business?
What will help you is to understand the EPC business. We expect the market size to be somewhere around 4,000 crores in the next 12 months, and you can assume that we will be anywhere out of that 4,000 crores. 1,500 to 2,000 crore revenue we will deliver. And I have indicated to you that FY29, 20% of the revenue of Blue Star coming from data center segment alone.
You know, I want to dial back to the point that you made about room air conditioner margins. Some price hikes have been taken, as you mentioned. Are there more that you are comfortable taking with the kind of demand you're seeing, Mr. Thiagarajan? Will you see another set of price hikes for room air conditioners?
Tamanna, you are aware that we are a company where we have to deliver value to the consumers, deliver value to the investors as well. So chasing market share blindly is not the way we operate at all. There has to be a right balance. Our market share goal is 15%. We will keep an eye on that. Right now we are somewhere around 14.3, 14.4. At the same time, if cost increase will have to be passed on as a price increase, we will do that. Some more price increase will happen, definitely. At the same time, let us say post festival season or during the peak festival season, if the commodity prices soften, we will reduce the prices. That has been the policy we will go ahead and do. In fact, we should have passed on the entire thing. We couldn't. The industry couldn't. That's where we are.
No, so what is the extent of price increase that is left to do, which you're saying will definitely happen?
See, if strictly speaking, additional 5 to 7% will have to happen.
Okay.
And I doubt whether the entire thing could be passed on. 50% of that will have to be passed on necessarily.
Okay, so up to 3.5% will have to be passed on. All right, thank you so much.
In the off season, it hardly matters actually. That is the right time to pass on the price increase as well.
Okay. In India, in large parts of the country, has become all-weather requirement of cooling now. So I don't know how much of an off-season you also see. But thank you so much, Mr. Thiagarajan, for joining in. Always a pleasure having you on NDTV Profit and speaking with you.